Welcome to Ultra Market. Today is February 14th, 2024. This clip, I want to talk about BAC trade, a trend following trade. What constitutes a trend? Higher high, higher high, one, this is high, higher high, lower lows. And you can have this nice uptrend. And they use the tools called regression channels right here. I will show you on trading view. What I do is I will use regression trend and I mark the low and the high, and it will give me a nice trend using regressions. Regressions is a mathematical relationship that gives you best fit line across the data set. So I have nice upper channel, lower channel, medium line, and all that. So obviously this is uptrend. And when do you enter uptrend? First of all, is when to enter a trade. There's 2 points you can enter a trade. You can enter on the retracement uptrend or on a breakout of that it make new high. So for example, I have this nice trend here, and then it decides to pull back. And then bounce off one of the technical levels, start pulling up. I can think about getting a Thor's hammer, which is a long tail, right? Upside down hammer with a very long tail. That means buyers stepping in, giving a floor. And in that sense, then I will enter the trade on the falling bar that breaks new high. Or I can wait for it to break this new high, the previous high of this whole trend. If it break, first break bar on the second bar. After the first breakout bar, then I will go. So for example, right, let's say we're here. And it make a trend already. And it make a trend. It broke high, but I didn't catch that. So I have a trend. High, high, lower, low. I'm watching. I'm waiting. And this would have been a breakout, but then it came back down. So it didn't. You have long tail actually, so people are selling into this. So at this point, I'm thinking, okay, I need to wait. Ooh, look, big breakout bars. But I don't enter. You do not enter on the breakout. You enter on the next high. First, let this bar do the nice momentum breakout. Great. Now, when it broke above this high of this breakout bar, then I'm going to trade. So, whoa, right here. Open, gapped up. Well, put in an order, and it do its thing. And it broke up. All right. So now you hold on. Where do you get out? You set it at the previous low. This right here. Previous low right here. Right. That's the previous low. Below this, you get out. That's the directional trade. So again, rule number one is you have a trend where uptrend is higher high and lower low. Okay, the other way around too. A downtrend is lower low and lower high. Okay. So downtrend is lower lows and lower highs. There you go. So, right. So this is downtrend, and this is uptrend, and I have a indicator that bracketed in red, as you can see, and then bracketed in green. But so it make lower lows and lower high. That's a downtrend, right? So first you got a trend. Two. Now you're looking for entry. Entry is the second bar after the breakout bar high. In other words, first you got the breakout bar right here. When the next bar make a new high above the previous high, you enter. Again, so you have the breakout bar, and then the next time frame, the next bar, if we go above the previous bar's high, break above the breakout bar's high, open trade. Where's your stop loss? First, every time when you open a trade, there's profit target and stop loss. Stop loss, first you always think of stop loss. Alright. So you look for previous value of the trend. And your profit target, well, that depends. Depends on a lot of factors. So first, you get a trend, uptrend or trend, and then if it's an uptrend, in this case, uptrend entry, I should say. In this case, uptrend entry. Up. What did it went there? Okay. Up. Trend entry is the second bar after the breakout bar is high. This is the high of the breakout bar, right? This is a breakout. Breakout bar is when we new high of the previous high. That's the breakout, right? And then when you make new high, you open it. Stop loss right here. Right. Previous low. Or you could set it on previous high. Right. Previous value of the trend. Right. This trend. This is the low. Or you can use previous high. Depends. You have to be flexible and depends on how far away, a lot of other factors. But I usually look at the previous low. That's that. Profit target depends. For this situation, I will pull all the way back. Where's the previous high after the breakout? That's how I do it. Now, oh, let me get up. All right, so we have the rules. And then it start doing this. They can do whatever they want. They never make previous low is already down here. So you have a lot of room and then you make new high. Now for my case, you can see I'm looking, by the time I'm looking at it, you already do this. And then it has a pullback. I'm looking at the pullback. I'm looking at pullback, and that's this technical level, it bounced off. And that's where I decide to open the tray on the bounce off. I probably have, did I move this? I would have, did I bounce off here? What do I have? Oh, okay, I opened here. The tray was open over here, yes. Okay, so it bounced off. In these, I'm waiting, I'm looking, and then I'm like, okay. After a few days, 3 days, is start turning around. I say, okay, that's two ways to get in. Right. This is a breakout tray. Right. For the first example, I told you this is what we call a breakout tray. So breakout trend tray, uptrend, trend falling, breakout trend falling tray. Okay, that's what this one is. Now this one is different. This one, all I did is a retracement trend falling, what I would call. You have uptrend, and it broke this uptrend. It broke outside. You see the trend channel, it clearly broke down. And then I have a technical level, and it bounced off that. And I will wait. I will wait and see You can take this to trade after I make a new high after bounce off, but I don't see a false hammer. It's just a little tail here, so I wait. I wait that until 3 bars. I see 3 green bars. I say, okay, I can take trade because it looks like it's bouncing off this level. Right, on this. So on a, this is what I call this is a retracement trend following trade. First of all, again, trend has to be clearly established. And then trend, okay, price action goes into retracement. Often trend is broken. As in this case, the trend had broke off this nice regression trend line. It came off, right? But must be less than 50% pull back of the trend, of the whole trend. That's very important. Less than, so if you move beyond 50%, that's not a good retracement. That's just really sellers came in and sort of crap out of that stock, right? Even if it was uptrend. So that's very important. And then you need to look for technical levels. You look for technical levels. In my case, in this case, I pull it all the way back. Right, this is BAC. I've been dropping for a while already. I've been dropping after Silicon Valley. Fundamentally, a fundamental reason why the whole banking sector was dragged down by the regional banks. Since large market Silicon Valley banks broke up, and it dropped. This whole drop, and I have to connect some of the high point, and connect and make a downtrend basically. Or I can use the trend regression. And then eventually this broke above that downtrend. That's why this trend, whole trend broke above it. And I have these technical levels and it bounced off those levels. I will make a separate video on how you draw lines, but this is more of an intermediate advanced that you have already know how to draw all these lines, especially the long line of 6 months, 3 months, a year or so, right? It broke this downtrend line basically, and it bounced off it. It broke, came back, so it came in again, and then bounced off it. Right? That's when you open the trade. It bounced off technical level, right? So price action, first of all, and then you have the 3. The third rule is either bounce off technical level. Okay, this is where it's very subjective, I have to say, when you say bounce off technical level. This is where your experience, everything comes in. Or false hammer. False hammer. Long tail. I have a video on false hammer. Go review that. That's very important. That's a very important setup. Very profitable setup, I have to say. Or false hammer trade. That's that. Right. And then you set your stop loss. If it's uptrend, previous rally, stop loss. Right. If it's fall uptrend, right, previous rally, and for downtrend, previous peak. Okay, that's where you get up. And then you set your profit target. You can use percentage. You can use okay, break up the next trend, or you're gonna ride this. That is a lot of a way to set profit target, and I have other videos that cover that. Okay, so this is the fundamental of a bank, BAC, Bank of America. Now, why do I take BAC, not Citi, not MS, and stuff like that? No particular reason. They all these are pretty strong bank actually. Like wow, look City recover after this Silicon Valley breakdown. Right. J.P. Morgan Chase, same thing. Right. And I just happened to pick Bank of America after 3. This is the initial trade. It's a small to keep me tracking the banking sector, basically this trade. When it really break up this trend and the things even look more positive, I'll add to this trade. I'll open trade for Citi, I'll open trade for JP Morgan, Chase, and so fundamentally, every time I open trade, that's actually an investment thesis or trading thesis. Why do I long? I have to explain that to myself. Right. And back in my trading days, I have an answer to my to head trader or the risk management. Why, if they come down and say, why do I open this trade? What is your investment thesis? What is your investment theme? That's really important. And my investment thesis is that the Fed, we're looking at the end of possible inflation. We have a really ultra inflation environment. And the Fed's been raising interest rate, and it finally stopped raising interest rate. The question becomes, when is going to lower interest rate? We're looking at, people are projecting maybe end of the 2024. Who knows, right? But smart market is always 6 months ahead. So I'm thinking, okay, let me start watching these guys, start putting some small play into it. And when the Fed really starts signaling it's going to lower interest rate, the tech's not going to benefit. So is these banks have been depressed so long while we have the AI run the whole last year and beginning of this year, and sector rotation going to come in and they're going to take up these sectors that have been unfavored because on a low interest rate environment, in actuality, people will go out and borrow more money. And mortgage is going to borrowing, people are going to take out more mortgage and more people can qualify. And this is a brand broader for all large banks, mortgage. And when people take out mortgage, and if they default, well, it don't hurt that bad because the bank will repossess the real estate property and auction it off, sell it. And typically, in a lowering interest rate environment, is good for real estate, it's good for borrowing money. So, which is a big part of bank profit in that sense. So, I think it's still a little early. So that's a small trade. I just bought long curve vertical. When I buy a long call, here's the other rule. When I buy an option, it has to be at least 120 days to 150 days out. This trade, in actuality, is going to be all the way out to June expiration. And people argue, oh, you bought options, you're gonna lose your premium every day. Yes, but that's fine. All I need is for it to break up. And my profit target on the trade is actually 50% of my maximum target. So right now, I'm looking at, it costs me, the most I will lose is $35. The most I can win is 65, half of that. It's 32. So it's a kind of like 1-to-1 ratio, which is good in that sense. First of all. Secondly, when it break up, we'll have to see. If it break down, I can get out if it break below this yellow line. Yellow line is kind of more of a long-term downtrend, as you can see. I connect it all the way back, before the drop. That's a yellow line. And this white line is connecting these high lows, and then some technical level that when they intersect. So this is a more intermediate advanced charting strategy, but the play is the same, remains the same. And it's a long play. I have all this time for the develop. Yes, I can also sell the call, or sell the put or buy the call or stuff like that. It's a spread. It's a call spread right now. I hold a long call vertical, basically July 24th. Strike 34, 35. So if you go beyond 35, and I will pretty much realize my maximum potential is only 65. As if you go above 35 or on 35 price on day of expiration. But I'm looking for half of that, and I'll get out. I don't need to hold it all the way through in actuality. But in actuality, I'm looking to add. I want to add positions on City, on JPM, and we'll see. I have to see. But that is the trade. That's the rule. Very clear and very. Let's put this on so everybody can see. All right. So we can all see clearly, and you can review this. Yeah. So those are the rules of trend following, and that's how you play, and that's how I play. And I would not short uptrend or longer downtrend. That's just against trend following, and we'll have to see. I want to lay the groundwork of how do I do a trend following trade. That's combination of either breakout trend following or retracement trend following. That's two types of play. But that remains the same type of idea across. Anytime you see a trend, you can play one of these, or even play both, or you keep adding to the position every time you move up, and you just keep adding and holding, keep adding and holding. There's many variations, but the basic premises, basic principle, basic rules, this is how it goes. So go over my previous previous technical analysis video, how to draw trend line, the false hammer play, false hammer's candlestick pattern, and combine that into this rule, and you have the. And then also my video on stop loss and profit target, combine all these 4 videos, right? The technical analysis of how to draw trend line, the false hammer, candlestick pattern, and the stop loss and profit target, where to set them. I combine with this 4 video, and you will have a whole package of that you're ready to start looking for good trade, how to do trend following trades, the best way, the professional way, in that sense. Okay, that's about it. This is it for this video. Thanks for watching, and I will see everybody next time.